Hello, everyone. Welcome to today's presentation, Maximizing Pricing and Fee Structures with Concourse Fees and Commissions. On behalf of BHMI, I would like to thank you for your time today. My name is Casey Shear, and I am the Director of Marketing at BHMI. With me is Cheryl Fitzgerald, who is a Senior Program Director on our team. During today's session, we will start by giving you a quick snapshot of the history of electronic payments. We will then summarize the main participants involved in the processing of transactions. At that point, we will dive into a discussion about the different types of fees and commissions. We will then discuss some of the main challenges payment processing companies are facing today. And as part of this session, we are excited to introduce you to Concourse Fees and Commissions and explain why it's giving companies the flexibility to pursue new business opportunities, retain customers, and improve profitability. So we would like to start by taking you down memory lane and highlighting the different electronic payment options we've seen over the last 70 years. The idea of card payments came to the market in 1950 when the Diners Club card was introduced. Bank of America then rolled out the first credit card in 1958, and by 1966, a group of banks created what eventually became known as MasterCard. In the 1960s and 70s, we also saw debit and prepaid cards start entering the market. Then in the 90s, e-commerce took things digital. The first online purchase was in 1994, and we saw PayPal come into the market in 1996, with many e-commerce options to follow. At the beginning of the 21st century, consumers started to use mobile phones to make payments. In 2011, Google became the first major company to launch a mobile wallet. Today, there are many mobile wallet options. More recently, real-time and P2P payments have entered the market and started growing in popularity around 2017. Since then, real-time payments have become one of the fast and growing segments in the market today. So, as the number of electronic payment options have increased, so has the number of transaction participants. Let's first take a look at the participants that can be involved in card transactions. A customer initiates a payment by paying the merchant for the purchase with a credit, debit, or prepaid card. The payment transaction is then routed to a payment gateway, who then passes it to the merchant acquirer. The merchant acquirer, which is sometimes called a payment service provider, provides connectivity to the appropriate payment network. The payment network then provides connectivity to the bank that issued the card. I don't have it pictured here, but issuing banks often use third-party processors to handle payment authorizations and related accounting. Now let's take a look at the participants in real-time P2P transactions. The payer is the person that is sending a payment to another person. The payment service provider provides connectivity between the payer and the payee. The payee is the person that is receiving a payment from another person. And the settlement institution is settling the funds between the parties in the payment transaction. For example, the settling institution may be an ACH processor. Although these tend to be the types of participants involved in card or real-time payments, there can be other participants that I have not mentioned. So as both the number of electronic payment options and the number of transaction participants are increasing, how do these transaction processing companies stay in business within such a fiercely competitive market? Well, one of the primary ways is fees and commissions. Although there is not enough time during this webinar to explain all the different types of fees and commissions, I'm going to highlight just a few that are commonly used. The one most of us are familiar with is interchange fees. These are paid by the acquirer to the issuer. They are typically based on a fixed amount per transaction type and a percentage of the total transaction amount. Rates are set by the various payment card networks and determined by factors like transaction amount, payment card type, acceptance method, and industry type. Now let's talk about gateway fees. Payment gateway providers often charge separate fees to connect a service provider to the gateway. Fee structures vary with each provider, but often consist of a flat fee per transaction, a percentage of the transaction amount, or a combination of all three. Another common category of fees is service fees. Payment service providers often charge fees to cover business costs and earn a profit. These additional fees can be flat fees, they can be based on a percentage of the transaction, or they can be a combination of both. To meet the needs of clients and remain competitive, service providers have become very competitive with their fee structures. The other area I wanted to mention is commissions. These are transaction-based incentives that are used to stimulate specific business growth. To give you an example, payment service providers often pay commissions to resellers if they facilitate relationships with merchants. We are seeing companies implement very dynamic commission structures, and they can fluctuate based on transaction size, volume, or even time of day. We are also seeing a lot of new types of commission structures because of new and emerging payment methods. As you can see on this slide, there are many different types of transaction-based fees and commissions, and they are unique to every business. As we have worked with payment processing companies, we have seen that one of the main challenges is not having the ability to quickly modify fee and commission structures. As a result, companies are finding it difficult to remain profitable in a highly competitive market. They were also finding it difficult to introduce new initiatives into the pricing strategy. And they were also slow to roll out new business relationships and product offerings. So now I'd like to introduce you to Cheryl Fitzgerald. In her role as Senior Program Director at BHMI, she has experienced the challenges I just mentioned firsthand and has been very involved in helping companies address them. So Cheryl, thank you for joining us today.
Oh, absolutely. I'm glad to be here.
So to start out, Cheryl, can you tell us a little bit about Concourse fees and commissions and why companies are choosing it as their fee and pricing system?
I'd be happy to. So Concourse Fees and Commissions is a real-time, rules-based software solution that gives companies the flexibility to create any type of fee or commission on any type of payment transaction. Let me highlight some of the features of Concourse. First, companies need to implement a pricing strategy with no limitation on the number or types of fees. Concourse allows companies to configure as many fees as needed and to add and modify fees without software changes or system downtime. Next, companies need to use data in the payment transaction to make decisions on which fees and commissions to charge and/or pay. The Concourse Rules Engine provides access to data in the Concourse Transaction Repository. Companies need to have fees and commissions assessed while transactions are being loaded in order to meet service level agreements. Concourse loads these transactions as they arrive. If they're being captured in a log file or a database table, Concourse will continuously load the transactions into the repository. If they're delivered in a batch file, they are loaded once the batch file is available. And as fees and commissions are being loaded, they are being assessed in near real time. The pricing strategy, which is configured in Concourse, determines which fees and commissions to assess. More than one fee or commission can be assessed per transaction. And companies want to see the revenue and expense throughout the day. Concourse summarizes the assessments continuously throughout the day, and this can be used and viewed using the user interface. The financial impact of the fee structures can be measured and analyzed to determine if changes need to be made. And companies need to stage daily, weekly, and monthly changes to their pricing strategy without impacting production. Concourse supports versioning to allow changes to be made and validated in a working version, which doesn't impact current processing. Then, once the changes are ready, they're scheduled to take effect at a specific date and time without requiring system downtime, allowing companies to control when they are rolled into production.
Thanks, Cheryl. One of the areas you pointed out is that Concourse fees and commissions is extremely flexible because it allows companies to create any type of fee via the rules engine. Can you explain this in a bit more detail?
Of course, yes. So companies can use Concourse to implement a pricing strategy that includes the fees and commissions that they need for their business. In the graphic on the right side, the left column illustrates the common types of fees that are seen in fee schedules. For example, if you are a payment service provider for card-based transactions, you may have gateway and interchange fees for POS transactions, a service fee for each customer that uses your services, perhaps a processing fee for routing domestic and international ATM transactions, and also maybe a network service fee. Now, if you're a payment service provider for P2P payments, you may have agent commissions, service fees, gateway fees, and others. And of course, there are other services that a company may provide, such as a fraud monitoring service, for which they can charge a monthly recurring fee. Any of these fees can be configured in Concourse. Now, on the right column, this illustrates some of the common methods used to calculate fees and commissions. So this might include flat fees, fees based on a fixed amount per transaction type, a percentage of a transaction amount with minimum and maximum thresholds for both transaction counts and amounts. Tiered pricing, where each tier has a specific fee that decreases as each tier is filled, or volume-based tiers, which have a reduced fee that's applied to all transactions depending upon the volume reached at the end of the period, and pass-through fees, which are fee amounts that were calculated by another party and are included in the transaction data. Also, another feature of Concourse is the ability to calculate fees for reporting and comparison purposes. We call these audited fees because they are not settled. These fees are assessed or captured if the data is available or estimated when the data is not available. And remember, multiple fees and commissions can be assessed on a single transaction.
Thanks, Cheryl. Now, another area you mentioned is that fees or commissions can be calculated on any transaction data element. Can you explain what you mean by this?
Yes, let's start by looking at the structure of the transaction in a financial transaction. So a transaction has a set of common data elements that are present across all financial transactions, such as the origin and destination of the businesses involved, the date, and one or more amounts. There may be fees that can be calculated by using just these elements. Next, there's data that is common to the domain of the transaction. So a transaction involving a card has data that is commonly defined by the ISO 8583 standard. Examples of data at this level includes card acceptor information, merchant category code, POS information, message type, PAN, retrieval reference number, etc. For real-time P2P payments, the ISO 20022 standard is emerging as a standard for these transactions. And some examples of data elements for this domain are participants, account information, purpose code, and mandate information. The domain-specific data is what is most often used to implement fee schedules and pricing strategies. And finally, there is source-specific data that depends upon the system that's creating or capturing the data, such as the authorization system, the card network, payment processor, etc. Concourse does allow this data to be accessed and used in the fee and commission calculations when they depend upon information that is only available from the source system. This becomes a source-specific fee and can only be assessed when data from the specific source is available.
Okay, now that you showed how Concourse supports the creation of fees and pricing structures for both card and real-time P2P payments, can you show us some of the options that are available specifically for card transactions?
Sure, I'll start by talking about the transaction data sources. For card-based transactions, typical data sources are authorization systems that write to transaction log files, a clearing system that creates a clearing file for POS dual message systems, and card networks and payment processors, which create settlement and reconciliation files. For each source, additional information is added about the transaction. The content from each of these sources can be used to create a fees and commission structure, depending upon the need. The possibilities are unlimited, but let me give you a few examples for each of these data sources. Using the transaction log file, a merchant acquirer can charge fees to a merchant based upon the number of authorizations the merchant is sending, and whether those authorizations are approved or denied. Or an issuer processor can charge a fee to an issuer for standing in and authorizing a transaction on behalf of an issuer. A clearing file could be used by a merchant acquirer to create fees based upon the number of clearing items created for a merchant, or it could be used by a card network for charging an acquirer for clearing transactions that are rejected. And settlement and reconciliation files can be used for gateway fees for using a payment processor services, switch fees for transactions that need to be routed for authorization, access fees for international ATMs, or for assessing service fees based upon transaction attributes, such as transaction type, merchant category code, approval code, really any transaction data element.
All right, Cheryl, that sounds great. Now, can you give us a few real-world examples of how concourse fees and commissions can be used to easily add a unique fee for card transactions?
Sure, I can share two real-world examples. The first relates to the ease of creating a new fee. Suppose that a card network decides to allow issuers to charge an optional fee if a transaction is received from a foreign merchant. This is not a currency conversion fee, it is an additional fee. Now, the issuer could decide to have two different fees, a fee if the transaction is received in domestic currency, and another fee if the transaction is received in a foreign currency. This is easily added to a pricing strategy in Concourse because it's just based upon the transaction attributes received in the transaction data, the acquirer's country code, and the currency of the local amount. The next use case relates to fee auditing. As I mentioned earlier, Concourse can be used to audit fees. Audit fees can be used to capture or estimate fees for reporting or comparison purposes, but they are not settled. A common use case for this is to capture or estimate the interchange fees from a card network so that this can be booked as an expense on a daily basis and reconciled to the money debited by the card network.
All right, this makes great sense, and thank you so much for the use cases. Now, let's talk about real-time P2P payments. Can you describe some options that are available for these types of transactions?
Absolutely. The transaction sources are similar to those of a card payment. There's a transaction log file that will be created by payment processors for payer and payee financial institutions. Payment service providers will create settlement files to settle funds. They also create reconciliation files so that parties can reconcile the payment transactions. Companies have the flexibility to use any of these transaction data sources to implement fees within Concourse fees and commissions.
Thanks, Cheryl. Now for the million-dollar question. How easy is it to add, modify, or remove fees and commissions in the system?
Oh, that's a great question. As you know, fees are never static. They change annually, monthly, and daily. And not all fees change at the same time. To keep up with this ever-changing nature of fees, Concourse supports the concept of versioning. So changes to the fee structures are made to a working version, which is a version that's used as a sandbox for making changes that have no impact on the production system. Then, after the changes have been made, they are tested to ensure they are accurate and complete. If more changes are needed, they're made to the working version and retested. This is just an iterative process. Then, when the changes are complete, the version is locked and the changes are scheduled to take effect at a specific time in the production system. Again, no downtime is needed. Simply, once the scheduled time arrives, Concourse starts using the new version. For a small change that is easy to validate, this change can be in production in less than an hour.
Okay, so what happens if you're in the middle of making monthly changes and a highly important change needs to be made today? How is this handled? Do you have to wait until the monthly changes are complete?
No, of course not. You don't have to wait. Concourse allows many working versions to be active at the same time. Changes from one version can be merged into other versions, which means that changes that are needed today can be made today, and then they are merged into the other working versions that are in progress to keep them current.
Thanks, Cheryl. So now let's talk about the value proposition. As Cheryl has mentioned, Concourse Fees and Commissions is making it easy for companies to support any business opportunity, client relationship, or product offering that their sales and marketing teams bring to the table. This is because Concourse enables companies to configure any type of fee or commission in a matter of hours without the time and cost of software development. As a result, they are experiencing all the benefits that are outlined in the diagram to the right. Concourse Fees and Commissions provides the ability for any company that processes payments to be proactive, creative, and gain a competitive advantage. We hope this presentation has inspired you to think about what your company could do with a system like Concourse Fees and Commissions. Really, the possibilities are unlimited. And if you come up with some ideas and you want to pursue them, give us a call and we'll show you how it can be done within Concourse. Now, during this presentation, we focused on Concourse fees and commissions, but our clients also have the option to elect one or more of the other modules within Concourse. These include Concourse Core, Concourse Fees and Commissions, Concourse Disputes, Concourse Extended Settlement, and Concourse Reconciliation. We don't have time today to talk about all these other modules, but if you'd like to learn more about them, please visit our website at bhmi.com. And we want to thank you again for your time today, and we hope we get the pleasure of speaking with you very soon.